Hi guys, sorry I was I was looking at another screen there. Hope you're well. Welcome to the middle of the week. It's Wednesday, the 15th of April. Welcome to theproptrade.com. We're halfway through the month. And what a month, what first quarter it was. Oh my word. Scratchy head. Trump had an interview with his friend Fox News, Fox Business this morning, and he was banging on about Jay Powell, the guy that he actually appointed, remember, saying that if he doesn't quit, I'll sack him. Oh, he loves that, doesn't he? You're sacked. I mean, he should have stayed on the telly as far as I'm concerned. But anyway, let's not get dragged into that, Uncle Stu, shall we? Yeah, what can I say? Obviously his approach and his use of the English language is terrible. In a word, as far as the market's concerned, we're sort of sliding sideways. We're going to trade into the open today. We're going to use our different strategies, see what we come of it. Next to me here is the Dow. So here, this is the Dow on the 1 hour chart. You can see, let me just reset that. I'll make it a bit bigger. Reset it a bit there we are. Let's move that down a wee bit. Let's move that up a wee bit. There we are. So we're biased, get rid of that. You see, we're biased to the upside. Our pre-market high we've just hit in the last couple of hours, so we're biased to the upside. Sorry, let's bring that in here. So here on the hourly chart, we would have got we had a touch on the outside of the Bollinger Band there on the 11 o'clock candle. We got a significant cross here on the hourly chart. So this has been long since the completion of the 12 o'clock candle at 1 o'clock. Let me make myself a little bit smaller so you can see the chart a bit better. Actually, the chart doesn't get any better, does it? But never mind. Let's just bring that down there a bit. There we are. So that would have gone long down the hourly chart. So let's come down to our trading time frame. So the hourly is long. So we're biased really to go with the trend, really, aren't we? So let's just reset the 5-minute chart and see where we would have last had an opportunity. So we've touched the outside of the Bollinger Band all the way back there. So it's been very much sideways action. The purple, big, thick purple line here, remember, guys, is the 200 period moving average, the long-term moving average. Obviously, on the 5-minute chart, that's 200 5-minute candles. So it's not that long, really, but we're above it, which is positive. It's what you're interested in. The midline here, the Bollinger Band, is the 20 period moving average, 20 5-minute candles, and we're in the upper half of this move. So lots of volatility here at 12:45. Might have been something Trump said. I don't know. To be honest, I was actually painting. I was painting a wall earlier today, so I've just sat down from when I looked at my charts earlier this morning from last night's overnight trades, and I haven't really looked at the charts. So I've been away from the charts. We've had Morgan Stanley with very good earning results. Bank of America. TSMC as well, I think, reported earnings. We'll have a look at the earnings in a minute. Very strong day yesterday, up 1.18% for the stock markets. The Nasdaq was up 1.96%, and so we're with yesterday's move, and we're up. So the Dow here on the 5-minute, touch of the outside of the Bollinger Band, long there and up, didn't get to the target 2, sideways, not going on. So sideways, not great, not great, not great. That was down, but didn't actually happen because of this volatility. Flat here, stayed out. That's a key move there. We've already touched the outside of the Bollinger Band, so we'd be looking to go short. However, the trend here has outstripped the mean reverting strategy there for the last 35 or whatever it is, 30, 40 minutes into the open. So trend is that's what that's telling me. We haven't reverted. We touched the outside of the Bollinger Band. We touched it there. We touched it there. We hadn't reverted on that first one. It didn't revert on that one. We kept going high. So we kept going high. So I am now looking for a potential reversion because we've got this touch of the stochastics. But don't jump in too quickly. Don't jump in too early. Wait till the candle is completed on the time frame that you're trading. The 2-minute or the 1-minute trader might have already gone short. But let's wait. Obviously, the downside of that is it's against the trend. Remember when we looked at the 1 hour chart, the chart was up, so we're against the trend if we take this chart. We've just put in a new, we tested the pre-market high again here in the last 5 minutes and again in this current 5 minutes. So this is biased to the upside, so be careful trying to catch the top of it. However, as It's going to be that. Sorry. However, the stochastics have touched. Just because they've touched, they haven't turned down. They're still flattening out. They've touched. They might bounce off. They might go back horizontal again. Vertical again. Who knows? We don't know. So just don't jump in yet. But we are looking to go short on this one. But the trend is up. Okay, so that's looking for a potential short. But obviously, the issue is we're 15 minutes before the open. So don't jump in too early. Wait for the opening trades perhaps to die down. Remember, such a strong day yesterday. The Dow was the weakest of the three main stock markets, up 0.66 of 1%. Guys, if you want to trade something else or you trade something else on a short-term basis, let me know. But these are my preferred options on the 5-minute time frame. The Nasdaq and the DAX as well. Obviously, the DAX is live, but has an impact from the US Open. I just realized I haven't got a drink with me today, so I might have to terminate this short because I can't talk here for an hour without having anything to drink. But there we are. We're already a bit down. So our pre-market high, 48,614. We're down a tad from that, but just wait for that. And this is my preferred time frame. Obviously, if you were looking on this on the minute time frame or the 2-minute time frame, using exactly the same strategy, that's interesting. That's gone short there into that. Then it's reversed and stopped you out. Now it's touched again. We're looking to go short again. That's still moving up. So interesting. That's still also preparing to go short. Potentially. Who knows? It might just continue to move up. The 1 minute is again suggesting that we are, at the highs of the day and we've bounced back up again. But let me just go back to the 5-minute time frame, which is our default, which was what we're going to trade on. And let's look at the other setups, see what the trending setups are showing as well. On the short term, we should be long, is what this is telling me. So let's just look at the moving average one. Is our first one here. And what's that telling me? Well, quite volatile. But you can see here the 21-minute. This is the 5-minute chart on the Dow. Lots of volatility would have probably stopped you out of the panic of the move. But as you can see here, I hope you can see here, the body of the candle, these 5-minute candles, hasn't closed below the mid-moving average. And that's what we use to trail our stop loss up typically. Obviously, if we had it exactly on the moving average, then remember, this is the 9 period. The red one is the 21 exponential moving average. And the closest to the price action is the 5-period moving average. So it's the 5, the 9, and the 21. We're looking for a cross on the 5 and the 9 to start off with, and then a cross of the 21 to confirm the move. As you can see, that was down, got stopped out. That was up, that got stopped out. That was up, and that's run. Okay, obviously, if you've had your stop loss, you might have just gobbled it up with all that volatility there and panicked and thought, I can't make, I'm not going to give pips back on that big move there. But this is trending higher. So this would still be open if we hadn't got our stop loss too close. Remember, our stop loss initially on this turn, that would have been your entry here, or the last positive. I mean, the very conservative entry would have been all the way back there at the turn of the market. It's quite a big gap, obviously. So our entry, oh no, I didn't realize I was big, thick blue lines. But anyway, there's our stop loss. There's our entry. And obviously, we'd want at least, 1-to-1. So we'd want to be up here somewhere. Again, as I tell you, this strategy, we use the multiple of the ATR. So 20, let's use 20. So we're going at 485.15. So 2 times 20, 2 times the ATR when we got in. Is 4,555. 4,555 would have been around about here. So that would be our first target. If we just kept our stop loss not too aggressive, we'd have hit that and closed out that half your position, and then just trail the stop loss up afterwards. If you'd use your stop loss and moved it up once we'd moved up and got this volatility out of the way, that would have really freaked me out, to be honest. And then that one might have all stopped. But the stop loss, let's make that stop loss red so we can see it. Sorry, no, that's green for go. Let's make that green for go. This is our stop loss. That's red. So we'd pull our stop loss up to the entry once this noise was out of the way, and we didn't know. And now it would be pulled up to here. Now, so I'm saying now, as the trend has moved on, it would be up to here. And now, currently, I would have my stop loss here. So it is below the 9-period moving average, but to keep us safe for this volatility because we're running into the open of the market. So we've got in here, we've taken our first target at 22 times the ATR, or we've just left it on. We've left the whole position on. We're just trailing up, waiting for the market to take us out on open. I'm happy to have it there. So obviously we're still some 10 minutes before the open. We would expect more volatility to come into this. So let's just bring on the let's click the volume buttons on. Remember, the volume on the on these derivative markets is not the real volume coming from the exchange. If you want to trade real volume, you know, look at futures accounts. It's not something we offer here at the Prop Trade at the moment, but we are looking at it. But as you can see, my stop loss is around about the 20 period. I'll obviously give back all of that, but you know, I don't care because I've got in here, or the system's got in here. That's how it would have traded it. Okay, I would have probably I would have taken some profit out of this market, but it's a strong trend, and that's what trending markets do. And that's flying in the face of what we saw with the mean reverting strategy. You can see we're giving some back now, as you might expect. Let's have a look at our different trend following strategy. We'll look at 2 trend because it's a strong trend. Let's look at our MACD and SAR setup. So again, a bit of a, interestingly here, the MAC dots, the hourly chart. That's why that looks different. Let's have a look at here. What's going on? So choppy again with the parabolic SARs. That's why we have the MACD with it as well. Why is the MACD playing up? Oh, my MACD's disappeared. Let me just get rid of that. Sorry, just bear with me a second. Sorry. Remove and I'll reinsert it. Indicators. I had this problem the other day, didn't I? MACD. I think it might be the way I've got it set up. So remember, the first the cross of the MACD and the signal line is the most important, and then we look at what the parabolic SAR is doing. So the last cross was down here. That was very choppy. That would have been a short there. Now it's gone against us, our stop loss up there, and it would have taken us out there. So it would have been quite a big loser, but we would have got out here as that's crossed on that candle there. So yeah, so we've gone long here. This one's gone long on this candle here. So this one's gone long as we go into the open. So that's gone long there. Our stop loss is down here again, and you can see that again. You can see the parabolic slope. You can see that. That yellow is not very good, is it? Let's change the make that a deeper color of the parabolic. So sorry. You can't see that white, can you? The yellow, it's the yellow signal line. Just make it a darker color. There we are. Make it thick. Make that one thick as well. A bit thicker. There we are. Should be able to see that. Right. So the blue and the purple line there is our MACD line and our signal line. So we get the signaling across here. We can see the cross has happened there. We've got long there at the red line, not the green line, but let's just there's the green line. Our stop loss would have been down here at Starford in similar movement. Obviously, we've got the same price actions. So this is still this was long. But when we flip here on the parabolic side, would have taken us out. So we'd have got out there, but then this has gone long again there. So the last entry here for this strategy is there. Our stop loss, I mean, catastrophic stop loss is all the way down there at the parabolic SAR. This is running out of steam. I would have had it, you know, 1, 2, 3. I'd have probably had it round about there, my stop loss on this one now. So that's the entry on that one. As you can see, this one's not taken any profit, but we've got a stop loss through there is where my stop loss would have been if I count the candles back. So we've got in on the flip. This is still positive, so it's a continuation move. So we've got to be wary that it may not run out, having been in and out of the flip of the parabolic SAR. And because it's so close to the open, I'm going to pull my stop loss up a bit tighter. Okay, so this is looking like it may roll over, but because but it's still long. Basically, we're just about in the money. We've been there, and we'll see how that pans out. So the moving average one's doing better than the MACD at the moment, and we go back to our default, which is our one we use. as default is the Bollinger Band and the stochastic. See if that's actually crossed yet. And let's have a look what we're seeing here. So we've touched. See what's happened here? We've had a touch, and that would have triggered a short. Okay, in all honesty, that would have been short there. So this is short, but it's really tight, isn't it? Because it's pre-market high. To be honest, we are 8 minutes from open. I'm not going to risk that. I wouldn't risk that, although we've had a week. We're still in overbought. I'd like to see this come back down out of the overbought area and a bit more get air between the two stochastics, the K and the D line. It's looking okay, but I would have got in. That would have been a potential. If the system's trading every potential signal, it would have gone short there at 48,600. And interesting, it's a big fat round number. So understand we might get some sell off there, but we might break through it as well. So the pre-market high is 14,012, where we are now, basically 14,614. And we're with the trend. Remember the hourly trend. So this is very much against the trend, that trade. So I've decided not to take it so close to the open. The moving average one is still positive. Shame I can't show you more trades, but more strategies. But the Nasdaq might be stronger, might be similar. Bit of a sideways action there, so that's gone there. That hasn't got into an overbought area. Interesting, it's come back down to the midline. So there's less activity here on the Nasdaq than there is on the Dow. We're stuck at the 200 period moving average, so that's an interesting resistance. But we have gone down from it, and the lows are getting higher, aren't they? So that's caught my eye, just from a pure technician point of view. There's a little rising bottom there with higher lows. Higher lows. Bit of a wedge there right on the 200 period. So we might break out. This might go to the pre-market high, which is much further away up here at 25,890. We're currently at, where are we? 25,830. So there's potentially 60 points in that to the upside. However, as you can see here, the highs on the stochastics are getting low. So this is suggesting here on this time frame, there's that low there. We could be getting low. So there's all sorts of potential going on there. Oops, let's just do that for now, in fact. But that's the body. Sorry. Oh man, let me just move that. That's through there, the body. So it's broken out of that already, I'd argue, to the upside. So that is now to the upside. We're too close to the open to make that any sense of that. So we are bursting out. We are moving up. So that would have been a bit of a speculative buy, actually. I would have bid that one, even though we're so close to the open. So let's actually put my money where my mouth is. Let's have a quick buy here on the open. Obviously could reverse quite aggressively. I'm just looking at the 200 period, really, and I'm looking for quite a potential run, certainly to 25,868. Let's stay with the Nasdaq as we go into the open. Let's put the volumes on. There we are. There's our volumes gone on. So we this is the opening trade. I could really do with a bit of a drink, to be honest. Right, should I just nip away? Right, I'm going to nip away. I don't have anybody here listening to me or watching, to be honest, but I do need a drink. It's quite a long way to go, that's all. But anyway, let's see how that goes on, how that plays out. We didn't put a stop loss on there, did we? We should have done. Obviously, we've opened the trade. We've gone long, speculatively, admittedly speculatively, but again, using this strategy, really, stop loss should be around about here. Let's do it properly. Let's edit the stop loss. So stop loss really through this 20 period, or just the bottom of there. So 25,823. So stop loss 25,823. 23. 25,823. We'll confirm that. And first target would be up here at 25,871. And then we can leave that and can come away. Take profit. No, hang on a minute. No, I want to amend this one, don't I? All right, just bear with. What I say, 25, 20, yeah, definitely. That looks like that might get taken out. 25, that might not as well. 25,870. 25,870. I'll do confirm. Now we'll do about the lot size. This is demonstrating the system and where we go. So see what that. So we've actually got some skin in the demo game. Obviously, here the strategy here is actually rolled over, but we're playing with the open. So up we go. 25,860. So we'll see what happens on that one. So the Dow. What are we saying about the Dow? We were talking about the Dow rolling on, but there we are. As we with the pre-market high here, still with 2 minutes to go, has pushed even higher. So we could reverse. Understand? This is what this is telling me now. But you see why we didn't jump in. This is still trending higher, and we didn't take the mean reversion there on the. Is it the Dow? I always get mixed up when I'm talking lots. No, it was the Dow, wasn't it? It was the Dow to the upside. So there we are. That's continuing to move up. And we looked at our trend following strategy, and that was very much in the money, wasn't it? Our trend following strategy. There we are. So there's our stop loss. So I'm going to drag that up again now. This is the one we were talking about, wasn't it? So I'm going to drag that up to the bottom of that wick. Still in fact, I'm going to drag it up to the previous. Lock it right. Actually, I'll lock it in there because it obviously could when the real cash kicks in. Obviously, there's a little bit of delay here. It's in 14.29 for me here. So this one's played out really nicely. But again, you can see that our midline Bollinger Band. Our midline moving average is held from the body. But obviously, if you've got it too tight, the wicks would have taken you out. So that's why it's down here. So I'm really using that as a marker, the 9-period moving average for the body of the candle to reverse to, and I will then close it out. If not, my stop loss is now here, probably about the 15 or something moving average. This is the 21 EMA. This is probably about 15, 16, something like that. But we're going higher, so I'm happy to lock in profits. You see the position on the NASDAQ has taken us out at target 1. And that's we're continuing to move higher. So I'm locking this in on the trend following. Remember the mean reverting strategy we were looking at? Won't have played out because we're still moving out. We might reverse, obviously, but as you can see, the activity of the open has lifted us. Obviously, the good results from Morgan Stanley and Bank of America have helped. Let me just show you those, which is leading to a move higher. So I'm happy to lock in my profits now. And scroll my stop loss up. If we go to our close position, that hit target 1 because we set it and forgot it, didn't we? So it's not. There we are. Oh, didn't. There's our closed NASDAQ position. So we made 15 cents, but it hit our target, our first target of 817. We've gone to pre-market highs as well. So we bid on open at the United States stock markets, and we would have been long here from 12.20 and may have taken half profit out. Probably would, to be honest, would have taken half profit out once we got to 2 times the ATR. But as you can see here at 12.20, when we first broke above the 20 EMA, obviously we had no idea any of this was going to happen. But we are still good to go. That looked, we haven't come back. I've just moved that up, haven't I, since this candle's formed. So we're still in that one. In fact, I'll just leave it there. It's got a bit too close, hasn't it? Leave it where it was. There we are. We're out. So we did get too aggressive. It has started to reverse as the cash market kicks in on bigger volume, understandably, but I don't care because we've rammed it. We've guaranteed a huge win. So we went from 48,500 to 48. What's that? 48,640. So 130 points there on the Dow from 12.20 and nicely moving up. So let's see if we do get some mean reversing triggering. Let's just go back to the Dow, which it will have done, no doubt about Bollinger Band and stochastic mean reverting strategy. But remember, we are very much against the trend. So you can see what's happened here. We had that first cross here before the market opened at 14.20, which we ignored because it was too close. We've pitched higher, and we're getting an initial reaction here on the big volume of the cash. But again, I'm going to let that settle down and see what happens. But we are overbought, so let's see how that candle closes and see if we do get a bit of a revision. But we've already got to the support area of the 20 period moving average here on the 5-minute time frame. So let's see how that pans out. I'm just going to sit on my hands for now. Having realize that this was a trending market, not a mean reverting market, but see if the actual open creates our enough to turn us against this rally. So if we just go, obviously our pre-market higher time frame charts will all be positive. There's the 4-hour time frame. Positive from yesterday and just going up. A bit of consolidation last night, this morning, and a current 4-hour candle that's still got half an hour to complete is positive. It's engulfed the previous 4 candles and it's pushing to the upside. We've got new highs after the market is open ahead of the pre-market high. That's all relatively positive still at this point in the US trading day. On the back of the probably strong Morgan Stanley results and also Bank of America. Let me show you the other earnings results that have come in already today, which is lifting the stock markets. So I'll come back to AMSL in a minute. They came out this morning, the Dutch-based chip maker, big beat for them as well. So Bank of America consensus was $1 earnings per share. They came in 11% better at $1.11. Revenues also monster, 47 billion and nearly 48 billion. Was expected to be pretty big at nearly 30 billion, but outstripped that as well. Trading was very strong. Morgan Stanley, the best of the big Wall Street trading reports, $3.06, 3.43. They came out a beat of 12% from Morgan Stanley, beat on both the bottom line and the top line. And look at this earnings, this revenue number as well, coming at $33.15 billion from an expected $19.62 billion. People say to me quite often, why do these Wall Street analysts underestimate all the time? Everyone beats, it's an average of 85% beat. It's just the way the market works. And once you understand the mechanisms of the market, you can see what a big impact these big banks on Wall Street can have, the financials. Everybody's exposed to them. And most of them are doing quite well here. First Horizon, you can see a smaller tier, came in at 53 cents compared to 49 cents. That's an 8% beat. And their revenue went over $1 billion, was expected to be 866 million. So just again, another strong financial report. M&T Bank also better than expected, not quite as much, but a 4% beat and a 1.7% beat on revenue. Obviously, the only fly in the ointment yesterday was Wells Fargo, and their shares sank 5.6% yesterday. Miss on both revenue. Their trading performance was pretty poor, and also their earnings per share yesterday. But that's the big US Wall Street banks all reporting. Goldman Sachs beat on Monday. JP Morgan and BlackRock beat yesterday. Wells Fargo was the big miss. Morgan Stanley and Bank of America beat today, and also Citi to report still. So we'll see how that pans out later on this week. So does Citi already report? I think Citi might have already reported, actually. I haven't said that. Yes, I think Citi reported the other day, didn't they? Can I go backwards on this one? I don't remember. I don't know. Can I go back to Tuesday? Citi report? Yes, I think Citi might have reported yesterday. Sorry, this is bugging me now. Must have reported. Of course they did. Yesterday they were yesterday, and they did beat yesterday. Of course they did. Yeah. 2:43 Tuesday. Yesterday was not updated. Oh well. Anyway, we don't trade these individual stocks. We just trade the impact on the indexes. And as I say, we were good to go. Close that one down. Okay, so let's just flip back to our 5-minute chart. See what's happened. Cooling down. So there's the volatility of the open. Huge volume. Second 5 minutes kicking in now. And again, still bid. So this is, what's this one? This is the Dow. So we're still bid. So if we hadn't have got too aggressive, or if I hadn't got too aggressive with our trending strategy, got the stop loss a bit too tight because of the open. There we are. We might. Oh no, we wouldn't have been. Huge spike there. Ignore me. So anyway, we guaranteed a bit. Well, we got a relative at the top there. So this may be showing more signs of see how these 3 or 4 candles pan out here on the open, but we are biased to the open, to the upside. So a nice win there on our trending strategy. Let's just go back to our mean reverting strategy. That might have kicked in a bit more here on the Dow, and see what on the Nasdaq we saw, didn't we? The Nasdaq. Let's just go to the Nasdaq. Sorry, the Nasdaq took us out of that 5, whatever it was, 870. Was it 570? I can't remember where we put it. It was the previous high, wasn't it? It was around here. So we were taken out here on the open, the trend move, and we got in on that speculative move, didn't we? Only it wasn't that setup. It was the mean reverted strategy setup, wasn't it? So this is what is in caught my eye. This little triangle here, and we were bursting out, and we'd broken through the 200 period moving average, and we took a speculative buy. We weren't getting too clever. We wanted to take our take our profit at this previous high here at 470, wasn't it? And the previous high, the pre-market high, is where we ran to and where we was pushing to at the moment. So the trend is still moving, and there you go. So we had a dip here on our stochastics. So if we'd taken that short, we'd have been taken out, or that would have been a losing trade, because the trend is still stripping head. And that's, when people ask me what's the difference between is the market trending or is the market mean reverting? Well, eventually everything does revert back down at some point, but the trend can run and run and run. And we had a strong day yesterday. Let me reiterate. The Nasdaq, remember, yesterday was at 1.96%, nearly 2% yesterday. We were positive in the pre-market, like we'd done with our, like we'd looked at our hourly chart. So we'd been positive in the yesterday. We'd been relatively sidebound, but we've been positive because we'd been here up on the hourly chart. We'd been in the upper half of the Bollinger Band, but it was less so than the Dow, wasn't it? And Nasdaq was a bit sideways, and that's why that 5-minute chart caught my attention, and we took that speculative long, and we were successful on that a trade from here up to the top here, and it's continuing to move high. So we're no sign of it yet reverting, but it will eventually, because we've been outside of the Bollinger Band once, twice, 3 times extensively. Now we're moving high. The volatility's increased. The Bollinger Band has widened, and we are now approaching back into the overbought area for the stochastics, but we're not there yet. So we could still see some movement to the upside, and we've yet to have another cross to the downside from the blue, from above to below of the orange line here on our stochastics. That's what we're looking for to take a short. But remember, we're against the trend trying to short this, guys. So there's the Nasdaq. Back to our Dow. Long. It was the Nasdaq. I showed the trend. The Nasdaq was. It was on our trending strategy, wasn't it? Long. So this has crossed and we've moved down, but as you can see here, and we now out of the overbought area, but there's no actual confirmation candle to the downside. So we've had a lot of wick activity to the downside, down to 48,565 in the last couple of weeks. But this one might be the one that again confirms that we've moved down. But we are literally just in the first 15 minutes of the open. So see where we settle if this is giving up some of the pre-market gains, which it inevitably will as profit gets taken off the table. But we don't care because we got that. We identified the trend, we ran with it, and we bagged quite a nice move on the upside, didn't we, on that trend following strategy. There we go. So here we are. Quite a big reversion now. Again, some people will say, well, why didn't you get in it? You got in here, it signaled there right on the open. You could have gone short there because I'd have probably been I might have had my stop loss too high. I'm letting it settle and see if there's any other movement. This might be just a simple taking out of this profit move up here before we then move up to the other side. But you can see it's quite a significant sell-off here in this 5-minute time frame. So I'm not going to be doing anything till this settles down a wee bit in a very choppy market. But the pre-market work had got me the right side of that trend moving, hadn't we? We also looked at the MACD and SAR, didn't we? So I can't remember what we said with that one. So there we go. That has confirmed a short, or is confirming a short there, like the Bollinger Band and stochastic setup. So that was a nice long, again, another nice long trend. We got out here because the parabolic SAR flipped. We got in again here, remember, with our tight stop loss on the open, and again we were stopped out on the open if we'd taken that. So that would have been a losing trade. This is now, that is confirmed down. So this is looking like an entry on this candle, but this monster candle, isn't it? To the downside. Where are we? Where have we got? Where's the distance we could move from here? Well, if we zoom this in, we're at the low of our day, basically, aren't we? So we've given up all of the pre-market gains, and that's again why we have those pre-markets. So that's triggered short. In fact, it would have got in here because it's just candles just finished. So we'd have got short there. Stop loss really pretty scary, to be honest. I mean, the catastrophic one is up there at where the parabolic SAR is. That's a bit too squiffy. I'd put it there for now, and let's see how this actually moves out. That's quite a sell-off, isn't it? It's quite a reversal there on the Dow, and that's what can happen at the open, get chopped the wrong way. But as we saw with our trending strategy, we moved our stop loss up as the action was taking place pre-market, and then got chopped as the opening. But we managed to pull our stop loss up really tight to guarantee a big winner. This is technically it's a short position, but it's looking a bit risky. But anyway, let's see how it pans out. And again, you can use the ATR to create a target. The way this strategy works typically is that if the trend is going to start running, and it doesn't look like it is, because look at this is just chopping around. It's not the one to be using here. We get taken out on the tightness of our stop loss. But so let's see how it pans out. So quite a turn on a tail. I don't know whether there's been any comment or anything. There's lots of chatter due today. When I say chatter, I mean the IMF conferences in Washington still going on. So I said we had Trump being interviewed by Fox News earlier. The hard bit of data we saw an hour or so ago was the Empire State doing much, much better than they expected. So that, along with the benign PPI yesterday, remember I thought, we had that very hot CPI last week. We had CPE that was in line with expectations. And then we had a much better than expected PPI yesterday. So the whole gamut of inflation numbers yesterday. So that helped lift sentiment yesterday. The Empire State would have probably helped lift sentiment. Well, it's less of a significant indicator. And that is very volatile. So just the fact this has gone from minus 0.2 to 11 seems massive, and it is in number terms. But that's what these indicate. These the Empire State, Richmond, and the Philly Fed do. They chop around quite a lot. But as you can see, we are now back quite significantly positive for the April reading from being relatively weak early in the year. So again, that's part of Trump's argument that manufacturing is starting to crank up. These data centers are getting built. They are getting built by American workers. Construction is going gung ho. We'll see how it all pans out. But so that's a relatively positive note. Markets trying to look through, obviously, the war. Remember the war? It seems only like 2 days ago that it stopped getting mentioned. But we'll see if these potential talks later in the week, the talk of those talks actually takes place. There was the blockade, obviously, is the key one. 6 tankers apparently were turned back yesterday, and we're talking about slight optimism around potential further talks in Islamabad as early as later in this week. But we'll see how it all pans out. But markets are shrugging it off at the moment. Anyway, we were where were we? We were short. Let's get rid of the calendar. We'll come to the other assets in a minute, guys, once we've slumped. So there we go. It's understandably such a big sell-off, a bit of retrace on that, a big candle like that. But again, technically the system would have triggered short here, but whether we would have taken it, it's been somewhat questionable given the big moves we've had, or the hour plus moves we'd had to the upside. We missed we didn't take the short that was generated on the Bollinger Band stochastic one earlier, because technically it went there on the open, so you would have been, if the system had taken that, it would have been good to go. But now this is already pushed to remember how this strategy works. We're looking for a reversion from the extreme, but we've had such a move. This is now looking to go up, but we're still trending low. So it would be a continuation trade would have triggered here on that one there, on this main reverting strategy. So it finally comes to life. So there would have been a continuation trade from there. Very small risk given the massive, where the market's reverting to. I would have had my stop loss up here at the, ignore the rules really. Stop loss there and possibly even closer. That's the 200 period, remember, because it's such a big move down, and see how it plays out. Basically, don't get too uptight with it. So now, given that this is going, I would have had my stop loss now at the top of the wick of that first 5-minute candle post the open. So stop loss there now, and entry. It's still obviously be a losing trade if it reverses to it, but we are continuing to move down on obviously the big volume of the live market, and the stochastics are still moving down, and the trending strategy, the EMA one we were looking at before, which is locked in all those profits, would have probably also triggered short. There it is. So it's triggered short. So again, that's gone short there. But again, I'd be, having made all of this, I'd be hideous to give it back. But that is a new short position from that candle there. Sorry. From the close of that opening candle there. Let's give that green, but again, not too much. Change the get to green. Short, and again, the stop loss would have been there at that. I'm going to leave that one in. here our 9-period moving average, but it's such a big old move, isn't it? We'll see, but there we are. It's moving out. So again, that stop loss now is down here as this candle starts to move back down. So another, again, just following the rules would have bit risky, obviously, because depending when you entered, but wait till the candle completes. Ignore the wicks, guys. Remember, it's all about the body of the candle. And this is in the money now as well, going short. So again, a double whammy day potentially. The long trend pre-open, and then this reversal to the downside. Let's go back to our mean reverting setup. Bollinger Band and stochastic. Guys, any other asset you want to have a look at? Say, let me know. I'm going to, where are we? It's half an hour. I'm going to call this now. So, see how this time, obviously it may just bounce back, given that we are still against the trend, but it's interesting. We've gone below our pre-market low. So we went above our pre-market high, and now we've reversed within 5 minutes. That's relatively negative, isn't it? Of the open to our pre-market low. So this is perhaps going to be a sell day rather than a bid day, certainly in these opening trades. But as I say, we don't care. We got the rally up, and we're exposed to the market. Remember, you can only make money, you can only lose money if you've actually got a trade open, if you're actually in the market, guys. So you got to be in it to win it. Skin in the game is all what it's all about. So anyway, that's the stock markets. That's what we trade on for these opening energy of the cash session. Get away from trading high impact news, because it's not high impact news. It's just opening the session. Let's have a look what's going on elsewhere in the markets. Crypto had a good move. We're at 73.80. We were yesterday got to 74,000. 74,000's key. It's a previous end of day resistance area before we got to 75,000. Let's look at our daily candles here on our let's get rid of the volume. I don't want volume on there. Let's reset that for the daily. There we are. So as you can, oops, there we are. That's the Bollinger. So as you can see here, or hope you can see here, lots going on, obviously. But there's the top of our channel, the 75,000 level. The purple dotted line is 74,000 here, and we went through that yesterday. We even went through 75,000. As I said, we still remain bid. We're in the upper half of the Bollinger Band still. Here, the mean reverting strategy is smudged because we can't get over 75. So we're not trending. We are still trending, but we've run out of steam over the last week or so. Good day on Monday, good day Tuesday at the start of it, but we closed below our highs, and we're down on the day so far today. We can't get and hold either above 74,000 or the more important psychological 75,000. Top of the channel is still holding like it did last time we went to it here on the 17th of March, and then that was a big move down towards the end of March as we went into the bottom of the channel at 65,000. Are we going to do it again, or are we going to break 75 and move to 80 in that next 85 and 100,000 to the upside? We'll see. But at the moment, the time suggests that is still continuing. The break could be significant when it comes to the what looks like to the upside at the moment, but we shall see. 75,000. There was some news yesterday which is fueling on Monday. Yesterday from Monday that was fueling some the move in Bitcoin. There was a big ETF purchases going through. $411 million went into the one of the Bitcoin ETFs. So that's obviously helped lift sentiment. But price is everything. We can't get over 75. We've ran to it again and declined. Let's keep watching to the upside. So Bitcoin remains bid to the upside on a bit of a weaker dollar this week. Obviously, the commodity of the moment, or the asset of the moment, remains both the physical and the derivative market for oil. Brent here on our derivatives is at 96.37 at the moment, and WTI back to a $5 gap at 91.38. So Brent and WTI obviously quite significantly below the $100 handle. We did punch back over $100 here on Brent on Mondays. I'm sure you all know we were down again yesterday, and we're down. Oh, we're bounced a wee bit today on heightened the blockade hold, the US blockade holding, Iran being squeezed for getting exports out, but also more importantly, the positive vibes that the ceasefire, although fragile was the overused word we all used last week, ceasefire is holding. Obviously, it was only for 2 weeks. The first week's already over. Middle of next week, that 2 weeks is up. What state will the blockade be then? Will Iran have got any oil out? Will the Americans and Iranians have actually spoken to one another again? Yesterday's talks in Washington between Israel and Lebanon came to naught, but there hasn't been any particular aggression of missiles firing on either side so far to any significant extent. So we've got a relatively market seeing through this. So oil continues to decline. The low we got to last week on the enthusiasm of the ceasefire was $93. So that's one to watch for Brent. And then WTI, that low from last week, took us, in fact, no, we were actually interested. We were below that low from last week already for Brent, for WTI under $90, which is where we've been today. The previous intraday low took us to $85, the bottom of the Bollinger Band there, and that was from the 23rd of March. So interesting divergence in between WTI and Brent, understandably, given the where all of this type of oil is sitting in the world, and the Americans don't really need any of the exports out of the Gulf, as he keeps saying. But he also, remember, only last week was effing and blinding about opening the strait, and now he's blockading it with his own ships, trying to squeeze the Iranians economically, and the Indians and the Chinese and the Russians all in suffer consequently. But anyway, so oil remains very much the centre, but less so than it was a week ago. Forex and the dollar continues to bounce back a bit. It was weak yesterday, 159 dollar yen. So we're up, down Monday, Tuesday, bouncing today. The dollar yen back to 159. The euro back from the break of 118 yesterday. Couldn't hold it, and we're at 117.80. Still very, very well bid against the dollar, and way over its 200-day moving average here at 116.75. And off that beginning of the month low under 115.25. We got to, what was that day? Oh, that was March, wasn't it? That wasn't actually April, but the 115 level. So a huge move for the euro in the consequence of the dollar, but couldn't hold at the first break of 118 for the first time. And you can see it's a support areas. We were coming down from the 120s at the beginning of the year for euro dollar. Sterling 135.60, so that is still holding the key 135 level. Couldn't get to 136 in yesterday's enthusiasm, cooling a bit today. Aussie also down today as the dollar's picked up. Where's the Aussie gone? Aussie dollar there is above the sterling. Sorry. Actually, sorry, it's turned around. So Aussie, having breached 71 yesterday and held it, has continued to move higher. Sorry, excuse me. I thought we'd come down a bit on that as well. So Aussie getting very well bid today, and at previous highs from March the 10th and the previous high. So we've got a bit of a V-shaped W top there on the Aussie market. Interesting one to watch, that one. If we get a breakthrough there, rush to 72. We haven't been to 72 for a very long time for the Australian dollar, but Aussie bid again today. Let's just look at that hourly chart. I thought we'd come down. No, we were bid. I think I was short Aussie Kiwi last night. That's obviously been stopped out. I haven't actually looked at my trading platforms. But that's yeah, then Aussie has it's had a good day. Sorry, excuse me. I thought we'd come down a bit. We hadn't. We'd moved it. I must have looked at it first. No, wasn't then. Anyway, Aussie bid 71.50 next resistance for the Aussie. Kiwi, is that Kiwi also positive? Yeah, it's back to 9,859. No, Kiwi's rolled over a tad. So Kiwi's like the others off on the day just a little bit, having found resistance at 59, having had a really strong run from under 57 just last week. For the Kiwi, Swissy 78.20, bouncing today. The dollar against in demand Swiss franc as we rejected 80 first half of April, and we've moved down significantly there, and then back under .79 for the Swissy. Some buyers yesterday at 78. As we went into 78 yesterday as well. I actually marked that down, but that's where we went to yesterday, 78. And we're back to 78.20 now, up to 20 pips for the Swiss franc. So dollar lifted a bit today, but the trend remains dollar negative, obviously, with what's going on in the world. Gold, 4,800 has finally been breached yesterday. Move up 780. And we're over 800 this morning, or we were 825 yet. So a bit more life in the old dog. Good day yesterday to the upside for gold, but we're approaching the overbought area, but smidging, and we're still not back to where we were in January when Trump started talking at that 4,888 level we talked about way back then as well. Remember, so it's proved a key area recently, hasn't it, since we first highlighted it in January. Support zone didn't hold there on the panic in March as we went down, but it's proving a bit of resistance area to the upside as well. So 488 or 485, $15 shy of the 5,000 level for gold is our next upside resistance. Although we've been in this above our 20-day for 1, 2, 3, 4, 5, 6 days now. 20-day moving average moving down, we are moving up. So gold getting a little bit of a move to the upside, but it's really a lot what's going on in the bullion and then the central banks area is moving the gold market. So we up from lows where we went into 4,400 and gave up all of our 2026 gains. We've come back some $400, $500 to 4,825. We trade at the moment on the gold market. So let's just, I've been here an hour now. Let's just go back to our stock markets and see where we are. And I'm going to wrap this up unless somebody has got something to say. There's somebody in the chat box. What I'm moving, I'm still bullish on gold, though. It's Woods. Okay, it's capped by optimism. What do you make of today's Trump's close to beginning over remarks? Should we hold ground because we know? Well, you know, that's chapter 1. Sorry, I've only just seen your comments here. They're from half an hour ago, my friend. I apologise. I don't know why that has only just shown up now. Where are you? You're on YouTube. Yeah, well, I say it was a strong day yesterday for gold. But if we come back to it's sort of cool today, but nothing. I can't get too excited about the gold market today. That was flattened out. It's taken a long there at 1 o'clock, and you got to target one, so that's ticked up quite nicely. Short term, 5 minute, be pretty. Actually, it's trending strongly, isn't it? That's in post. The open. So gold has lifted quite significantly since the open at 2 o'clock, and it hasn't reversed. So that's looking to revert, but we've continued to go high. So this is trending in the last hour or so to the upside as the stock markets have rolled over. So yeah, I understand. We're key to hold 4,800, 4,825. Today's high 4,830. So yeah, it's a positive day. That's still moving up. Interesting. So that's a weakening dollar lifting that, I would guess, as we've just seen. And obviously, you know, as the markets continue to take Trump's comments with an increasing pinch of salt, given the sort of the way they're all over the place. But the general feel, the last couple of days has been the fact that ceasefire is held, the lack of missiles being fired from both sides, the blockade's been relatively effective. 6 ports being stopped, or 6. The first day, obviously, there was some talk about Iranian boats getting through, but others boats are also getting through. I'm saying boats, tankers getting through the other way, going in to collect, but not being allowed out potentially, or where they're going, and other ports other than Iranian ports that have to transmit through the Strait of Hormuz, being allowed to connect to places like Kuwait and UAE and other parts through that key narrow waterway. So it's actually gone okay. So I think that's why the sentiment has turned relatively positive for the markets. However, as we saw here on our short term, we got there we go. So that was our have we been talking that long? So we did revert. We were short, weren't we? But then we've moved high here on the Nasdaq. Is it the Dow that's still moved low? Oh, there we go. We've got this disparity now between the Nasdaq and the Dow. It's the Dow we were looking after, weren't we? So we were short this one. That's our entry there. Our stop loss is there. We've moved down quite a bit. So I'm going to pull this stop loss down now, because it's against the trend. That's why you trade the market you see, not the market you think is going to, Nasdaq copy the Dow, or the Dow copy the Nasdaq. That isn't been the case. I'll have my stop loss there now to guarantee what looked like, again, very much against the trend profits. We're now in an overbought area here on our stochastics. Remember, this was it's against the higher time frame trend. We'd made a massive profit here on the trending market pre-open. And this is quite speculative, so I'm going to pull that down even tighter now, given that this is already overbought. So see where that one ends. But again, we've been good to go. We've got another winner by the looks of things on. Well, we have, because we've locked. That's our entry and that's our stop loss now. On the Nasdaq, Dow, sorry, on the open. The Nasdaq, on the other hand, we were long, weren't we? And we took that. We actually took that skin in again. Then it reversed. That looked like that was going back. But look where it stopped. It stopped on that previous trend line we'd already put in. Remember, we put these trend lines in before the market opened, this downtrend and the key 200. So we breached the 200, but then we bounced up. So that, for me, guys, would have been another entry here. Certainly here. You could have got in here. And we got new highs for the Nasdaq. So again, some tech leading the way, some announcements on deals lifting the technology stocks, but hitting the industrials, the 30 industrial stocks. The S&P, on the other hand, which I don't really trade on a short-term basis, chopping like the Dow, but then rallying like the Nasdaq. So more in line with the Nasdaq. But the Nasdaq and the Dow, my two preferred traders. And just for a Europe trade, the DAX obviously was already open, but the DAX less of a chop, as you might expect at 2 o'clock. Where's 2 o'clock? It's here. Less of a chop at 2:30. What I'm talking about on the open. There's the volatility, but again, it's biased to the upside, and we're back to pre-market highs for the Dow, for the DAX, sorry, and so that's trending rather than mean reverting as well. So if we look at that one on a trending basis, our last chart today, I'm going to wrap this up in a minute because I do need a drink. There we go. So that would have gone, that's messy. That's short, hasn't played, that's gone long there. So again, that was long at after the open, 420. It was long earlier, as we said, but very volatile. But that's gone long there. The last 5 and 9 cross was at 20 past 2, immediately reversing the short position. So that would have been losing short position. This is a long position with a stop loss. It would have to have been down there, but that's kept you in the market. It's come back against you there again. But trading the vagrancies of the open, you see how the US Open has increased volume here, and the DAX as well. It's marginally in the money. If you'd still had it open, it might have chopped you out, to be honest, but certainly stuck. Can't get the DAX is what I'd be looking at now into the Obviously, the DAX is now looking to close within an hour and a bit. 4:30 my time. It's 3:15 here. So 24,100 is the resistance today. You can see that there through there. That's 24,105 where the tops of those candles are. But take another 5 points off that. We're back to 24,100. So don't get too greedy. It is still biased to the upside, but if you had got in there, that would have taken you out if you'd been trailing if you'd moved your stop loss up against entry, which I've really well, I might have done actually. I might have after that candle, then that volatility, then that candle there. But this is right across open, isn't it? So probably still stop loss would have originally been down there, perhaps to start off with. Then there, then the bottom of this candle, and now probably about here. So a little bit of money guaranteed from the entry here. Let's just do that for the DAX. I didn't do this to we on the open, but again, whether I would have actually taken that right on the 10 minutes before the open with this sideways action and that, I might have looked to try and get there again like we did with the NASDAQ. But that is where, sorry, I'm going to leave that, stop that. So that would have been my entry, but that's probably my stop loss now would be here at the moment. Would I risk it getting to the 20? Possibly. Might have pulled it up a little bit there. Given that this is a weak entry, if indeed we'd managed to stay in this position, so that would have been the entry there. That's all. But you've got the volatility, the volume of the open. But I'm happy to take this now and move it up. But we do need to really break 24. I'm going to say 24,100, but 24,105 is the key resistance area. So yeah, whether that had been open or not. So I leave you now, guys. That is if you're looking at the DAX, you do need to look as that. That's a key. I mean, that dotted line. That's a key resistance zone through there, which we haven't been able to break for 5, 10, 15, 20, 25, 35, 45, 55 minutes. We haven't really been able to break over this 25,100 area, have we? Let's bring it right at the moment. There we are. So obviously that's causing profit taking, but we are banging against it, pushing higher. So perhaps we will move higher, but entry here, stop loss here. So a little gain on the DAX, but volume tailing off as the franticness of the US Open cools down. But now we're running into eyeing the next hour, the close of the European markets. But obviously, there's a long way to go in the 5-minute time frames, and we are with the trend, aren't we? If we look at the hourly trend, remember, we are biased to the upside today. So that's our hourly trend from this morning, down initially in the Asian trades, but as far as Europe's concerned, we've been above our 20 EMA period moving average and making new highs during the day. We'll see how we go. So anyway, that's the DAX on the 5-minute trend following strategy. So the DAX, the NASDAQ was still long, wasn't it? There we go. That's the hourly. Let's go back to our 5 minutes, what we're trading here. So the NASDAQ was a successful trade here initially, and it's continued to move higher, well, on good volume. So that's positive. So I'd be trailing that, been re-entered that and moved that up. The Dow, on the other hand, has freaked out, but we've made money on the downside. There we are. So it nicely, why didn't that? Is this where our stop loss was initially? Is that our entry? I'm a bit confused now. Oh yes, that was our yes. So I thought I'd pulled this down to at least here to guarantee some profit earlier. Perhaps I didn't, but anyway, that's what it's at the 9 now. These can obviously might give some back, but it's been two big legs low, haven't we? So again, happy to tighten that in, given that we've made such a big profit on that. So that's a bit sort of split the difference. Not the 9 period, not the latest wick. Remember, we were in all the way down here, so we're giving quite a lot bit back. So let's put it there. Looks like we might get taken out before we before we close, if I still hang around for a few seconds, that gets wiped out. So Nasdaq's been the Dow's been good to us, trending both up and then down, and the Nasdaq was good trending, and it's still trending to the upside. There we are. Nasdaq continues to move to the north. The Dow has reversed to the south, but we've made money going up, trending, and down on mean reversion because this is the moving average strategy, isn't it? So let's have a look at our default mean reverting strategy. That's turned to the downside. It's a bit slow. So that's our mean reversion. Oh, so that was we moved it here on this one, not on the. Oh, that's why. So that is just been stopped out. So our mean reverting. There we go. We got the touch of the stochastics confirming it. We pulled our stop loss. Oh, actually, well, let's say it has been taken out. So we even got some money or some points on the mean reverting strategy as well, from 48,465 to 48,418. So another 50, just shy of 50 points. Call it 40 points to the downside for the Dow in this first hour of trading. So take care, everyone. I will see you tomorrow. We are live later on in the evening. I think it's for the US. So we're doing the US Open. Tomorrow we'll do the US close. Remember that really volatile close we had on Tuesday. So we'll be live doing the same thing, except we're trading into the close rather than across the open. Okay, so join me for that. Chapter 1, thank you for your comments. I'm sorry I missed your comments about gold earlier, but I think you tend to be right. As we said, let's leave with gold. Gold is moving higher. We're over 4,800. We're over the 200 period on the 5 minute. I think we're probably the hourly chart is also over its 200. Yeah, way over its over 100. Struggling to get back up, and it's back into the upper half of the Bollinger Band over its 20-hour moving average as well at 4,825. The high today, I'm sure you're aware, is 4,870. So biased to the upside, having a bit of a sell-off during the Asian session, and then some buying ahead of the US session at 4,825 at the moment, but struggling there, but still significantly over 4,800. So take care, everyone. I will see you tomorrow. Do the same thing for the close of the American session. Hope you've found some benefit in these sessions. If not, let me know and we'll do something else. We're all here to help you. All right. Take care, everyone. See you soon. All the best. Bye-bye.